President Bola Ahmed Tinubu's proposed budget of 49.7 trillion for 2025, termed the budget of restoration, securing peace, rebuilding prosperity, has generated a lot of reactions. This proposal marked a significant increase from the 28.77 trillion budget of 2024. However, critics argue that despite the increased allocation, the budget may not effectively address the challenges faced by ordinary Nigerians. Concerns have been raised about the allocation of funds, with substantial portions directed towards the current expenditure and debt servicing, potentially leaving limited resources for direct welfare improvements. Nigeria's GDP has declined over the last decade as a result of low productivity, inconsistent economic policies, and devaluation. To get the economy back on track of sustainable growth, productivity, and employment, the government needs to first reduce its debt burden and restore its international credit rating to investment grade. Joining us now on this show this morning to discuss Nigeria's 2025 budget and the debt burden is Tilewa Adebajo, Chief Executive Officer, CFG Advisory. Welcome to the morning show.
Good morning, Ruben. Happy New Year. Good morning.
Good morning. Happy
Ayo,
New Year.
and good morning, Vimai.
Good morning. Happy New Year.
Well, the last time you were on this program, I think we discussed the same 2025 budget.
Yes.
And you were concerned about balance sheet of the CBN. You were concerned about debt servicing, which you said was over 50-something%, not even the 32% that people were quoting of the budget itself. And you didn't think that that was sustainable. Now, what has even come to the fore is the fact that Nigeria's GDP is about number 4 in Africa. We're far behind South Africa, Algeria, and one other country. So this budget that is titled Budget of Restoration, what at all can it restore? And what do you think that the National Assembly should be looking at in terms of, well, if there's anything they can still do about that budget?
Okay. Thank you very much for the question. I think what is important, first of all, is that let us dimension the economy. The economy consists of the households, which we don't talk too much about, who are really bearing the brunt of this problem. It consists of the firms, which is the enterprise, formal sector, which is about 50% of our GDP, and the informal sector also. Then it also constitutes of the government, which is where we spend a lot of the emphasis on. Then in between the economy is the financial institutions and the financial markets, which act as the intermediary. And the third leg of our economy, of course, is the global markets, which we're involved in international trade and finance. So the government itself, if you take a look at this government budget itself, it's about $30 billion, which is only 15% of our GDP. So in reality, the impact of government in terms of their spending has a minimal impact on the GDP of Nigeria. The households have significant spending power. So the households themselves really contribute about 35 billion. So households' expenditure is about $35 billion. That's what the Nigerian households have to spend. So when you combine that, you're looking at about 60 billion or 65 billion out of a 200 billion GDP. And the balance is made up of firms in terms of productivity, of farmers who are commercial in nature, agriculture being the largest sector of our economy, and of course manufacturing, financial services, and the rest of that. So the problem is that government actually controls the policy making. But if you take a look at the economy last year, from the investor perspective, from the investors, from the pension funds, from the pensioners, they've done very well. If you had $1 billion, $1 billion naira last year, and you put that money into foreign exchange, naira at this time of the year was probably about 700 and something. By today, you'd have achieved like an 85% return. If you put that money in the stock market, which is of course higher than the inflation level, so the real return there is positive. If you take a look at the stock market also did very well. The stock market returned at about 36%, which was also higher than the rate of inflation. If you had put money into treasuries, you would have gotten 25%. So if you had built a portfolio around these three instruments, especially with the domestic dollar bond that the government issued, as an investor, you would have done pretty good last year in this Nigerian environment, investing. So the people who have suffered or bear the brunt are the households. Because of inflation, the purchasing power has eroded. So we've not been able to consume. Things have become very expensive and tight. Then, of course, the firms are suffering because interest rates at 30% cannot support, which is one of your arguments, cannot support production on a sustainable basis. Yeah. But these interest rates are needed to be able to tame inflation on the short run. So then, of course, you look at the financial intermediaries. They are the ones doing very well. So if you take also a look at our imports, our largest import base is from China and India. And that import is close to $30 billion. So if you take a look at those two countries, we're importing most of our goods from those countries at about 30 billion, which is also the size of the government budget. So we must dimension the government budget and understand that the burden that the government is putting on the Nigerian economy are their policies and the fact that the debt profile of the government is going too high. Last year, debt service was 2 trillion in the 2024 budget. It was 8 trillion in the 2024 budget. This year, it's 16.3 trillion. Therein lies the problem. So what is important now is for us, where are the prospects now for exchange rate stability, investment, and growth? So that is really where we need to get the government to focus on now and to improve the prospects for economic growth, employment, exchange rate stability, which is important, and putting in the right policies. Trade, industry, and investment are policies that we're not looking at. That is a very important ministry because all our HS codes that we're using for import, we need to review them.
Absolutely.
You know, we need to clear all this congestion and corruption at the ports. Yeah. We need to get it out of the way so that people bring in their goods. Yeah. A friend of mine said he imported some things from China, that the cost of importing the container, bringing in for China, was cheaper than for him to clear the goods from Apapa port into his warehouse. Yeah. So, I mean, so these are things simple things that we can do that will help manufacturers to improve their productivity. So those are the things that government needs to look at in terms of creating that enabling environment. Because at the end of the day, the government budget is only 15% of our GDP.
Absolutely. Thank you so much. And I'm glad that you have talked about the real sector, you know, how we can grow the real sector. And I'm always talking about that, agriculture, manufacturing, especially with regards to this budget. But I know you have some, shall I say, propositions or suggestions as to how we can reduce our debt burden. You've always been, I mean, you're big on debt, right, from the ways and means, how Nigeria manages its debt, and also its rating, international credit rating. I'd like you to share some of those proposals. But beyond that, I'm really glad you talk about policies because we often look at the monetary side of things, but we also hammer on the importance of fiscal policy working side by side. Monetary policy, if not, we're not going to get a lot of gains. We just keep having these hiking rates, but we won't see real changes when it comes to inflation and the numbers. I'd like you to share with us fiscal, trade, and investment policies that you mentioned. You're right, the Minister of Industry, Trade and Investment has her work cut out for her this year. And it would be great for us to begin the conversations as to critical areas that must be looked at, certain policies that must be reviewed if we're going to look at economic growth in 2025.
Thank you very much for that multifaceted question. And I think it's important for us to realize that policy is also as effective as a lot of the expenditure we've been talking about. My concern with debt is that, yes, when the president says that debt is not criminal, but then at the end of the day, you need to understand what the borrowings that we're doing, where is it going to? You know, where is it going to? We cannot be borrowing to fund recurrent expenditure. Therein lies the problem. So what we're saying is this, that, okay, fine, we've gone through a situation now that whereby the positive from this where we are now is that there is no longer an allocation in the budget for fuel subsidy. So we've got that out. But the $10 to $15 billion we used to spend a year on fuel subsidy, we're now using it for debt service. Okay, so if your defense budget, your security budget, your education budget, your infrastructure budget, and your health budget, all combined is 14 trillion, and you are spending 16.3 trillion only on debt service, then there's that's the biggest line item in your budget. So there is now something, there's a red flag. Yeah. So, and as you've said, so government needs to create that because that is choking the monetary policy. So what we need to do now is that I think in the provisions of the Fiscal Responsibility Act and the Debt Management Office, there's supposed to be a committee which is supposed to be managed by the Deputy Governor and the Central Bank responsible for monetary policy, and the Debt Management Office, the DG of the Debt Management Office, the Accountant General of the Federation, and the Chief Economic Advisor. I think there's a provision there that they're supposed to meet on a regular basis for the harmonization of monetary and fiscal policy. So first of all, I think it's important that the president should elevate that committee, and not only elevate it, but also bring in some other outsiders, especially industry and manufacturing representatives, to be able to understand that there must be that harmonization of fiscal and monetary policy, because right now they're all working in silos, understandably. And of course, government needs to borrow sometimes to be able to keep the government going. You need to pay the salaries of soldiers, policemen, civil servants, and all that. That, it's a going concern. So there might be some challenges there, we understand that, but there must be limits. So the other proposal we're talking about, I think we've always hammered on, came from when we discussed the NNPC balance sheet. Yeah. Because NNPC is supposed to be remitting $3 billion a month into the Federation account from oil proceeds sales. They haven't done that in a long time. And that, of course, will impact the reserves and, of course, impact the availability of foreign exchange. It is clear that non-oil exports are not going to do the trick for us. So what is important is for us to get NNPC back into shape to ensure that we have the oil reserves. We have the reserves at an optimal level. So what we're saying is that since that cannot be done, you can see that there have been several transactions whereby Renaissance from the Shell has been sold out to, Seplat has bought out the ExxonMobil, Oando has bought some ENI assets, and there have been some bidding rounds. We need to ramp up production in the oil industry. There's some idle assets that the government can sell down some of these JV assets, and in the process can raise $30 to $50 billion. If you put this money in your reserves at the central bank, your credit rating will improve on the international level. Your borrowing will be cheaper. You will restore confidence with the foreign direct investors. And basically, you will now improve the prospects for lowering inflation, for stabilizing the exchange rates, and also increase foreign direct investments. And of course, you grow the economy in the process, and you reduce unemployment. So that way, government now seems to be credible in terms of what they're doing, because to be honest, we do not really need government. Government just needs to provide the policies and the enabling environment. The private sector, if you encourage it, can drive that. We've seen that Mr. Dangote has built a refinery. Mr. Bua, Abd Samad Ishaku, is also building a second refinery. So government, they are Nigerian entrepreneurs that if you give them the right opportunities, the Wale Tinubus, the Otedolas, the Elumelus, the Abdul Samad Rabi Ishaku, Alhaji Dangote, and many other younger ones, you've seen what they're doing with the flutter waves and the paystack into fintech. So we need to get this environment properly and prep the economy for proper growth, because government is not going to do the job.
Let's talk about prepping the economy, because a major part of the conversation is about how is this target of 15% inflation going to be attained? These GDP numbers, how are they going to be attained? The assumption is that there will be a rebasing of some sort. I'd like you to speak to that, whether you think that's the way that that's what is likely to happen, and whether that is the right way to go about it. And then secondly, as much as we say we don't need government, we know that government is still the biggest employer of labor in Nigeria.
That's not true.
Oh, really?
That's
Can you give me
true.
the correct statistics then?
No,
of
you
who,
see, nobody said you do not need government. Okay, government provides a significant function, and an efficient government will. What we're saying is that we don't need government in business, in enterprise. What we need government should provide us with the right enabling environment, with strong regulation. Regulation here is oppressive. Regulators are a bit overzealous and they think they control things. So you need proper regulation. So don't say we don't need government. We need government for... No, I never said so. I said, no. I never said we don't need government. I said government's contribution to GDP is minimal. It's only 15%. So it is the rest of the sectors of the economy that actually drives GDP.
But how do you juxtapose that with the amount of, maybe it may not
so
be
let
the
me,
highest
let me,
labor,
let me
but
finish.
with the amount of
Let me
labor
correct that
government
also.
employs?
Let me correct that also. So how many people are in Nigeria? 200 million people.
Approximately.
Okay, how many people does government employ?
Statistics are still, those
No,
statistics
government
are not
employs
available.
less than 2 million people. So what percentage of the population is that? Who is employing the rest of them? So let's be careful. And then let's put this matter of inflation to rest once and for all. The only body in Nigeria that is responsible for determining inflation and interest rates is the Monetary Policy Committee of the Central Bank of Nigeria. And that is why you see that separation. So while the presidency might desire, and we also do, we desire low inflation, because with low inflation, we can grow the economy. We all do, that's a laudable target. But at the end of the day, it is when the Monetary Policy Committee meets in their next meeting that we will get an idea of what their inflation targeting is. The Monetary Policy said they were going to target inflation to 24% this year, but because of challenges within the economy, they couldn't get that done. So let's wait for the next MPC meeting and let us understand where the direction is going.
But how do you reconcile that? Because your government, the fiscal is telling you that they've set a figure of 15%.
No, the fiscal did not send it. The fiscal is saying that they would like to see inflation at 15%. They don't set the rates.
Okay, one of the subjects we've been talking about on this station in the last few days has been the tax or the revenue reform bills.
Yes.
Or tax reform bills, as they are otherwise referred to. And the whole idea is to widen the tax base, increase revenue, ensure greater compliance and all of that. Now, these tax reform bills, which will also be a major point of discussion by the National Assembly in this January, along with the budget, we have those two major issues. Where do you see the convergence between the two? And do you see this National Assembly just, rule of thumb, just passing everything and saying, well, we have passed it, we are here to support the executive arm of government, no matter what anybody thinks. Do you think that would be a good approach, particularly with regard to the revenue reform bills, as they are called?
Well, it's interesting that the tax reform bill has been the only one that hasn't sailed through smoothly. Everything else has gone through smoothly, except this one. So, and you can see that there's been a lot of pushback from various segments of the society, and it's now become political. So, yes, when you take a look at some of the tax reform bills, for me, the problem I have with the bill is the fact that you shouldn't have 4 bills. You should have one single tax bill. And I think for me...
Well, there's the joint, there are some that are administrative. The administration bill.
Yes,
the joint revenue
we've
service
seen,
board bill.
Yes,
then
we've
VAT,
seen that.
yeah.
But you must harmonize all your taxes into one. That can all come into one. And I think if you are going the direction which you are going, trying to create one central unit of trying to merge customs and FIRS and everybody into one singular unit, then there's significant changes that are there. Anyway, that's just my own personal opinion. But the essence is that you can see that there has been some pushback on various areas, and the whole process now has become political. So I think it is important that, when you're doing something that is political, then it becomes consultative. So it is something that they need to go back to the drawing board from the executive side, and they need to go and consult the various political stakeholders, the various interest groups.
Nobel Udele said there were consultations, but even at the level of consultations, the governors didn't want to talk.
Yeah,
when they finally met with the governors forum, they were granted 15 minutes.
Yeah, it's not the government.
And asked whether revenue, more money will come in. That's the only thing they were interested in.
Yes, but see, there are official consultations and there are private consultations. So when you have something that is this sensitive, you need to go into backdoor channels. You need to go into a lot of horse trading, and you need to understand what the fundamental issues are, which will not be said publicly, and then the president needs to intervene. If the president wants to save his bill, then he needs to be able to invite the key stakeholders, like the governors' forums, have a chat with them, and convince them as to the benefits of those things, because this is the only transaction that hasn't gone through in terms of the bills. So I think it's become political, so there needs to be a step back and let them go and resolve it from the political side.
The last time you were here, and even now, the focus has been on the federal government.
Yes.
But some of these state governments have also announced budget proposals, quoting figures, billions and all that. Do you have something to say to the subnationals? Because oftentimes we overlook the subnationals, and they are closer to the people. And in fact, they should receive more of the torchlighting than even the federal government. Don't you think so?
Yes. When I was senior technical advisor to the Minister of Industry, Trade and Investment, one of the things I was doing investment facilitation. And we traveled a lot to bring investors to Nigeria. And one of the things we learned very quickly is that the federal government does not have any land. So any investment you're doing in Nigeria has to go to a particular state. So the federal government is just overarching for policy. Things actually happen. The factors of production of any productive economy happens in the state. So you have to locate in the state to get land and things like that. So yes, the governors, I think, have to be able to tie into the policies of the federal government to understand what they need to do. But at least within every state, there are certain things that are basic where the state government should be able to be held responsible for education, healthcare, provision of the infrastructure. There's these issues about federal road and state roads and everything. So yes, the state governments need to be under more scrutiny because they will be the ones that will make the most impact, especially at the local government level. So without a doubt, what is the state contributing to healthcare? What is it contributing to security? So that it's a 50-50 thing, and each state should be able to liaise with the federal government to say, okay, if we have an agricultural budget and government is spending X amount on agriculture, what is the state going to do and what is the state government going to do? So I think that's where the gap is. Because the federal, you've seen these budgets that have been announced now. What is the coordination with the state governments from each of the key ministries? Yeah. Okay, the Ministry of Health needs to be able to coordinate better with the State Ministry of Health to be able to deliver healthcare, and federal government should fund its portion, and then the state government should also fund its portion. So I think that's really where the gap is in terms of that coordination as to how you spend the budget, because they both have budgets for agriculture and they both have budgets for everything. So it's that coordination at the subnational with the federal to be able to make sure we make a significant amount of impact.
Well, on that note, we would like to thank you very much for joining us.
Just allow me to clarify the statistics, because you said government employs 2 million. Dangote, who is the biggest private employer of labor, employs about 20,000 people.
I'm not talking about one company. I'm talking about you can't look at governments and one company. Yeah. Okay, so you have to look at the sector. No. If you take a look at the sector of the economy, there are households, there's firms, and then there's government. Okay, when you talk about firms, it's the whole of the companies in Nigeria together. Right. as to what their total
So
employment.
as at 2023, Nigerian labor force was about 75 million.
Yes.
Out of that, Nigerian civil service, federal and state, about 5 million employees. So they're still lower in terms. That's about 10% of it.
5%.
Yeah, 5%.
Yeah.
So big takeaway from this conversation. Households be adversely affected.
Have been.
So the renewed hope
Yes.
that we are being promised, the restoration, we, the people in the households, may not see, right?
That's where
But
the challenge is.
other people may do well.
And that is
Stock
where-
market will do well.
Exactly. So
Okay?
that's where the government needs to focus.
All right, well, thank you so much. The conversation continues, certainly. I'm sure we'll be talking about this even a bit further
Yes.
weeks down the line. Thank you so much, Tilewa Adebajo. Thank you.